These are all the trades I took using the liquidity theorem, which I show in this video now. So exactly, all the trades I entered is after the retail liquidity and the smart money liquidity is taken out in the market. See, in this case, for example, retail trendline liquidity is taken out. Can you see the small trend line here? This is where the buildup of the liquidity is happening. So after the trendline liquidity is taken out, can you see the buy side momentum? Same thing. After the sell side liquidity is taken out, can you see the sell side? But unfortunately, there is no entry pattern formed in this edge. Otherwise, I would be in this trade, and it's also happening in the London session. I don't usually trade the London session, so I missed the move. And again, in the New York session, again, the sell side liquidity is taken out. I am in this move. Again, the sell side liquidity is taken out. It's also daily liquidity. I am in this buy. This is how we trade the market. This is the small insight of the liquidity theorem people will do. Yeah. So when coming to the video, let's discuss about the smart money traps first. How to avoid the smart money traps? Because in fact, according to the data, 70% of the smart money OPs are traps. Then why do you trust the SMC strategy to make it profitable in the markets? It is very tough to make the money in the markets using the common smart money concept strategy which was using by everybody is using the smart money, even beginners are using nowadays the smart money people. In 2018-17 the smart money concepts are worth learning, but in this current 2023 it's not, because it has become liquidity, because many people are using, right? If many people are using the same strategy, it will become liquidity, because the market moves on the liquidity and rebalancing. These are the only two criteria which the market moves. So let's come into the video. This is how the smart money will understand the direction of the market, right? Through the structure breaks, they will understand the market and they will take many OBs, many 1 minute OBs like that. And they will take a loss here, they will take a loss here, they will take a loss here. These things don't work in the current conditions of the market, because the conditions of the market always change according to the behavior of the people. Because if many people are trading the same strategy, it will become liquidity. So I will explain in this video how to trade the traps and trade like the banks. In this video, I will exactly show you how to trade like the institutions, like banks. Okay, so this is how the market moves, right? And this is the order block where many SMC people are putting buy positions there. There's millions of dollars of liquidity here. So just what the market makers will do to just get that liquidity, they will just give it a fake break of the structure, and now they will induce the liquidity on the opposite side. So successfully they have created the liquidity on the both sides of the market. That's why SMC trap is very important to get sniper entries. In this position we will enter, and for my team I exactly teach this, and we don't blindly enter after this taken. We have some confidence like divergence timing, etc., and we will enter here and target this liquidity. So I will write down some entries for you which I took exactly same thing. If you can master this single setup, you can be enough profitable in the markets. This setup is enough, guys. This setup is enough. Trust me. I will show number of setups using this strategy. So let's go into the video and I will show you the strategies. Now, for example, in this day, the market of the previous day's liquidity, right? Previous day's internal liquidity, the market of previous day's internal liquidity. So we assume sell side, right? So can you see the fractal delivery of the market here? Can you see the fractal delivery of the market? If you go on to the 1 minute, if you see the fractal nature of the market here, it was the transition is going downwards, right? Can you see the structure is going downwards? So in order to get the entry, we should induce some buyers, right? Because many people will sell, they will sell from here. If the market moves like this, like many smart money guys will teach, people would become billionaires, right? People will become billionaires. They will sell from this hobby, from this hobby. The market don't care about this. The market don't see this and see this. Is there any common in this? It's not. The market don't work like this. It's far more than that. So in order to trade like a banks, we should always wait for the liquidity graph to be taken out. That's the main objective in the criteria. So where's the liquidity? This was the high, right? Because many smart money people are looking for the sells here. So can you see after the liquidity is taken out with a huge speed and aggression candles and huge imbalance, this is a very high probability for our team. Because in this case, two types of traders are taken out. This is SMC trap. I am giving you the real stuff. If you can practice, it's the hidden key. And this is the retail traps. So these are the two types of traders taken out here, because why I called it as a retail trap is if the retailers see a huge period aggression taking the high, they have buy stops here. So they will be in the buy order and their liquidity will be, their stop loss will be here. There will be stop loss. So this is the target, most objective target. So after the opposite candle that was formed, there will be sells here. There will be stop loss. 6% is gain. This is how we trade the markets. This is the real objective nature of trading markets. And if you want another confluence, you can use this order block also. You can use the order blocks after the liquidity is taken out. And this is also trapped volume stuff. I will explain the trapped volume stuff here. You should understand the last sell candle before the buy move, where the retailer's liquidity is there. So intentionally, this move is given by the banks. Right? This move is given by the banks to engineer the liquidity of the smart money people, because this is the smart money order block and this is the break of the structure of the smart money, right? This is the break of the structure of the smart money. So many smart money people will buy from here. Can you see the smart money people reaction? This reaction and this pause is given by the market makers to engineer the liquidity. This is where the engineered liquidity, engineered liquidity is there in the market, and this candle got mitigated by this candle. So now the money is in this candle. From this wick the money is there. So this is just a confluence. Just to understand, the order block is also there after the liquidity, right? So this is how you trade the markets. Yeah, in the 15 minutes, right? Yeah, this is the order block. Cool. And if you refine it to the 15 minutes, this is the wick. So after this entry, we have a confluence of the order block and we have a confluence of the liquidity, trapped volume and engineered liquidity. Boom. These types of entries we take on the regular basis. This is how I trade the market. This much of confluences and understanding the in-depth knowledge of the market is required to take these entries. And again, the same thing. And show. This is the retail trendline build-up liquidity, and this is also a retail trendline. This is called a channel. They call it as ascending channel or descending channel. I don't know about the fucking retailers' names, but after the liquidity is taken out, I will enter the market. See, after the opposite candle formed, after the liquidity is taken out, I have a certain timing also here. I will teach here. I will teach for the mentorship students. But at this candle, you can enter. If you are conservative, as I am aggressive, I will directly enter here. If you wanna get high win rate, you can enter here and target this liquidity, this equal highest liquidity. This is the real way of trading. This is the real way of trading, and the way of trading like this is bullshit. Like the smart money, etc. is bullshit, because the win rate is very slow, and the stats are telling that 80% of the 70% of the OBs from the left are traps. So you should always open your eyes to understand the way the retailers are trapping, smart money people are trapping, engineering liquidities, where why the market is ranging. You should understand all of the stuff. Then only you can be enough profitable in the markets, right? And many entries are there. I use same. Can you see? This is the smart money trap again. Smart money break of the structure, inducement of the smart money, directly entered here, stop loss below here. These are the entries you will get. See, can you see the market gave a huge fast reaction. If the liquidity is taken, the market don't move like a fat cow like this. The market, the TPs will hit like this, very, very fast reactions. Because the liquidity is taken out, right? There is no need for the market to be there when the liquidity is taken out. So these are the entries I took in the week, Thursday, Wednesday, Tuesday. If you have any doubts according to the strategy, just keep a comment below. I will answer it. Have a good day, guys. Peace.